overall, when we are looking for investor readiness, and this is typically the next phase from launch, we are looking at these 8 areas. And so, Mr. Sole Proprietor, you can see that number 1 is team. And so that matters, to be able to see that you can actually work with people. So we think about team. Who do you have? Who are you working with? And what are the roles that you have on your team? We look at whether you have a clear problem that you are looking to solve and you've got a vision for how to solve it. We are looking at your value proposition. Is this a unique enough value proposition, or is this something that everybody else is doing? And this is a big African problem that a lot of entrepreneurs chase the next big thing, like, oh, my friend made money in this, and so I'm going to go into the same space and make money as well. But is your value proposition unique enough? We look at the product that you have, whether it's actually solving the problem you are saying it should be solving, and how efficiently it is solving this problem. Efficiency is important. There are a lot of business models that are so wasteful, you know, and you think, is it possible to create a less wasteful product? We look at whether the market is big enough. Sometimes as entrepreneurs, we're very passionate and we're really passionate about a particular problem, but this might be a problem that only you and your 5 friends are experiencing. So maybe your market is actually not big enough. So it's important for you to be able to validate whether there is some market in what you're trying to solve. We look at your business model. Your business model is really, how is your business making money, and whether that is scalable or not is important. So the business model is highly related to your scale. If the business model is, I've got a house that I want to turn into a B&B, great. It means you are a small business. This is not VC profile. But if it's like Airbnb, I've got an app which helps people manage and attract customers to their B&B, that is a scalable model. Might be in the same space, but different business models, and therefore different ability to scale. And we also already are thinking about how is it possible to grow this business quickly and exit it. And so when we're thinking about exits, we are thinking wide, whether this is the type of business that can create enough traction quickly. We think 3 to 7 years typically. And so it's like, is this a business that we can grow quickly, that it becomes attractive maybe to a larger corporate in the space, or that it can get to a place where it can IPO and people are actually really excited about investing in this business, or it creates a unique additional value to maybe another business that's existing in our portfolios. And so maybe you have a plugin that makes another of our businesses better or more efficient. That matters as well, because then we think if you grow and you succeed, you are going to add value to the portfolio. Maybe it's not just one portfolio company, but many. So that matters as well.